And welcome to our webinar where we'll be discussing the exciting universe of oncology and the innovations that are coming. We at Tema are really excited to have David Song with us, who's our portfolio manager managing the Oncology Fund, ticker CANC. And David was going to take us through the exciting world of kind of oncology innovation and what's happening. At Tema, just a brief word about us. We're a ETF issuer. We are focused on institutional grade products. We have 5 products out in the market, one of which is the Oncology Fund, which we'll discuss today. And we are, extremely interested in kind of presenting this bit of innovation and what's going on in the oncology world. So I guess first, perhaps introducing David. So David is the portfolio manager on CNC. David has, I would say, 25 years experience looking at the healthcare universe, 19 years as an investor. He's worked at places like Rockefeller, Millennium, and Balyasny, and he has a lot of expertise within the healthcare space. And David is essentially also a medical doctor, and he's got too many kind of titles to mention, PhD as well. And I'm really excited to have David with us today. And so I guess we'll kick it off, David. So, well, unfortunately, oncology sort of touches every part of people's lives. And by some estimates, 1 in 2 people are going to be diagnosed with cancer at some point in their lifetime. Maybe you could just set the scene for us in terms of what the oncology space looks like.
Thanks so much, Yuri. Good morning, good afternoon, everybody here. Really pleased to discuss oncology and the opportunity, investment opportunity. As Yuri mentioned, cancer remains a significant cause of death and morbidity. And in addition to those sobering statistics that Yuri had mentioned briefly on human suffering, the stats on the cost side are staggering, with some estimates of cumulative costs over the next 30 or so years well above 20 trillion globally. At the same time, we see significant progress being made from insights into the biology, and the tools have gotten better, tools that are used to enable drug discovery and development that is leading, in our view, to a fantastic period of innovation to diagnose and treat cancer. We believe that this rich ecosystem of diagnostics and therapeutic approaches, given that an investor at this stage can participate in a long-term period of productivity, where in our view, valuations in oncology are quite reasonable. It's thought that oncology or cancer is a disease of aging, and at least there exists a very strong relationship, which we think will mean increased incidence of cancer globally. Cancer and aging biology, without a doubt, is complicated. So I don't want to oversimplify it, but suffice it to say, you've got cumulative environmental insults, mutations, and changes in the body, such as the immune system, among other things, that are drivers. So we see a long-term sustained demand for solutions to diagnose and treat cancer, given the trends that we see in oncology. Now, over the past decade or so, what we've observed has been an increase in number of new drugs approved, and oncology remains a significant set of those drugs approved. We continue to believe that oncology will more or less lead the way, and that there will be a sustained boom in innovation, given tools like next generation DNA sequencing. The therapeutic modalities that are developed are getting to the molecular mechanisms of disease. And like many industries, tools like AI will improve R&D productivity, specifically in oncology. And what's also unique to oncology versus other areas of medicine is that this area has shown leadership, particularly in diagnostics. Diagnostics within oncology is very important, and you are seeing it in other places like neuroscience and inflammatory diseases, but really it is integral in oncology, where you see, as a result, more precise treatment of diseases, monitoring of disease recurrence, prevention potentially of metastatic disease as well. And without going into further, we can talk about it more. Diagnostics also helps improve clinical study development with the idea of improving the odds of technical success.
I mean, that's super interesting, David. I guess one of the things that you've got kind of this fantastic revolution that's going on in terms of oncology. But if we look out into the biopharma or the life science equity space, it feels like we're in a really bad bear market that's been going on for a while. How do you sort of think about that? And why do you think now is a good time to invest in oncology? And why do you think active management is necessary to sort of navigate this landscape?
That's a great question. It's a combination of our assessment that the fundamentals in the oncology industry are largely intact, and you couple that with we're about like 3 years, heading to 3 consecutive years of absolute declines in some of the representative indices of the core areas in biotech, small and mid-cap biotech. Actually, at current calculation, we believe that it's actually not 25% now of small cap biotech. Is actually close to 30% in most recent looking at it of companies in the small and mid cap biotech trade below net cash value. And after 3 straight years of declines, I mean, in these indices, no doubt sentiment amongst investors is very poor, especially if you hold that relative to other R&D intensive industries like information technology. That all said, we're seeing some green shoots. We've seen some recent M&A activity in oncology and other therapeutic areas. And this, along with the solid fundamentals, as we've discussed, give us significant confidence in the long term. And it's easier said than done, but the Buffett analogy may apply for a contrarian-oriented long-term investor to be fearful where others are greedy and vice versa. And in terms of the role of active management, what's exciting is that we see a plethora of companies. Many of them came out in IPO'd in recent years that offer a great opportunity set for investors to enjoy idiosyncratic returns. Now, the oncology space itself is very rich and diverse, and in our view, not entirely captured by the passive indices. For example, the representative indices are the NASDAQ Biotech Index and the S&P Biotech Indices. And in our view, they don't really have a solid representation. They under-index diagnostic companies or tools companies that enable cancer discovery and development. And there are niches that are under index in our view, like radiopharmaceuticals that are enjoying a nice renaissance period. So, with regard to this opportunity set, it's also a double-edged sword. There are companies in these market indices like XBI or the S&P Biotech Index that will wither on the vine. So attentive investors, with, I hope, capabilities like experience through many market cycles, as well as a medical science background and a passion to be a long investor, those traits, I think, will help sort things out.
I mean, that's really interesting, right? And so one of the things that if you study the previous cycle that you see time and time again is that the cycle tends to turn when you have a set of catalysts or data emerge where you have new exciting innovation that actually puts the world's attention on understanding these diseases and also seeing these innovations come to market and create revenues. That also kind of emerges as well in M&A and some of the things that we'll talk about in a bit. But I guess the main sort of part of this webinar is really to discuss these top 5 innovations that you, David, see in the world. So would you be able to take us through what you see are the most exciting areas of oncology coming up in the next couple of years?
Absolutely, Yuri. Let's start with, there are a number of innovations, but let's just walk through a few of these that we're looking at in the oncology fund. This in particular, the area of liquid biopsies or non-invasive diagnostics, basically taking, literally, drawing blood and analyzing the, what's in it, the, circulating tumor DNA and other analytes. There is a potential huge white space that now I think valuations in this area have come down quite reasonably versus what we saw 3 years ago, where valuations were very, very egregious. We're seeing, some of these breakthroughs in liquid biopsy that have started out in areas that inform treatment selection. More recently, we've seen progress in the screening side, particularly when it pertains to colorectal cancer screening. And, I can see in the foreseeable future, potential move to multi-cancer screening in asymptomatic individuals. It's certainly the case that catching cancers early is better than catching them much later from an outcomes perspective. And we highlight a few of these companies here that are sort of involved, and there are many more. And so this is going to be one of the most exciting white spaces, but now more investable because of valuations having been compressed. Then turning to an area called cell therapies, to put it very simply, it's living drugs that cure cancer. Taking the body's immune cells, oftentimes it's the T cells that can kill cancers. There's just a lot of progress here that we've seen in hematological malignancies. There was a period of consolidation a few years back, but there's leadership in some of the large, well-known companies, but there's also emerging growth companies and small companies that are sort of leading the way. I mean, we've seen so far long-term remission rates reported significant in various lymphomas and leukemias. And it's our view down the road that the costs of cell therapy are going to continue to decline and therefore become more mainstream, as well as the opportunity to tackle solid tumors is, realistic over the long term. Then antibody drug conjugates, or ADCs, is a very exciting development that's been ongoing for several years, but now there's like a real progress in potentially thinking of an idea to sort of replace traditional chemotherapy, which has its toxicities. We all probably know how challenging it is through loved ones who have suffered through this. But the premise is quite elegant or simple, right? It's being able to do this by taking an antibody that targets a particular cell surface, tumor cell surface marker, and then the antibody itself has a linker that's attached to a cytotoxic drug that can be sort of dropped when the antibody targets the tumor cell to kill cancer. And the obvious goal is to do this and spare healthy tissue. We've seen a lot of progress. We know about the Pfizer pending acquisition of Seagen, one of the leaders pioneers in this area. But we've seen a lot of progress through companies like Immunogen and Daiichi Sankyo and AstraZeneca. In particular, Daiichi's drug, as an example, has in HER2 targets HER2, something that's seen ubiquitously in breast cancer, but also in other tumors like gastric cancer. There we've seen very significant demonstration of progression-free survival in multiple settings of breast cancer. This particular drug and others, exemplify the blockbuster potential of replacing chemotherapy. A very similar concept is radioligand, which is gone through another generation, that with the premise of, again, sparing healthy tissue. You have the sort of cytotoxic compound is the radioactive compound that's tied to some targeting molecule. It could actually be an antibody that targets a particular cancer cell. We've seen actually very recently some M&A here where Eli Lilly announced an acquisition to buy Point Biopharma. Novartis, in particular, has helped develop this market and revitalize the space. We continue to see a lot of interesting progress here, and there was a recent IPO in the radiopharma space, so more to come here. And then another area called targeted therapies. I'm thinking of it here within the context of small molecules that are designed, classically to address the problem at the molecular basis of disease. There's all sorts of causes or drivers of cancer. Here, classically, I would say mutations. And one particular example is the RAS pathway, which has been thought to be involved in something like, 20%. There's a decent error bar there, but something like 20% of all mutations, or, in the US, that means it's like 250,000 new cases a year. And we've also seen a lot of some interesting M&A heat up too here, with Bristol Myers making an announced acquisition of Mirati just a few weeks ago. So to sum up, it's our view that there's an enormous, rich, diverse ecosystem of oncology where there's significant progress to address an unmet need. And at the same time, sentiment is very weak in the space. Starting valuations are very attractive. And you're seeing potential signs that companies the large companies out there have a need to revitalize their own pipelines through M&A. So I think for a patient long-term investor, I think this area of the market is attractive, in my view.
This is super interesting as well. We anyone on this call can actually download a report that has a lot more detail that goes into all of these different innovations. One of the things that kind of struck me listening to you talk is this sort of point about M&A picking up, and a lot of large pharmaceutical companies looking to refill pipelines, but also to look into these new areas of innovation, almost validating them. Can you maybe tell us a little bit about what's going on in the M&A sphere within oncology?
Absolutely. So with regard to M&A, you can talk to many of the leaders in some of the large cap biopharma space, and they can't replace their existing revenues through internal research and development alone. Moreover, there's significant revenues at risk through loss of expiration over the next years toward the end of the decade. At the same time, a lot of these large cap companies have, prodigious free cash flows, and have very strong balance sheets, and you see some of these examples of Lilly with Point Biopharma within oncology, Bristol and Mirati and Pfizer using some of its COVID revenues or COVID to buy up Seagen. Literally, you can have big pharma having the dry powder to buy 74% of the biotech index, literally. And
that's a fascinating stat, isn't it? 74% of the whole index can be bought by the free cash flow, the cash that they've got. David, I guess taking a step back, is you've got these innovations, you've got a very, very attractive valuations. Obviously, you run an oncology fund. How do you kind of go about thinking about putting together a portfolio that gives investors an exposure to the oncology space in a kind of risk managed way?
That's a great question. I mean, when we think about constructing an oncology based portfolio to take advantage of a lot of these trends at attractive valuations, I sort of think of taking a balanced approach and invest across various life cycle stages of a company, from the days of literally pre-revenue drug discovery. They tend to be small, obviously, to the growth companies that have maybe one or two products and they're in their growth mode and they're achieving profitability, all the way to sort of the established ballasts that tend to be more defensive oriented investments, but very important. And there are opportunities there. There are great companies on that side of the equation that are established, that have outstanding research and development capabilities and pipeline prospects. And then we try, we really think about investing and looking at a number of categories. Some of them we've mentioned, but there's just a lot that we haven't mentioned. For example, like immuno-oncology, some of the enablers of drug discovery in oncology, and other sort of classes of drugs. I think when you think about all of this and you look at what are the investment alternatives out there, I think you look at the representative categories. And first off, looking at the NASDAQ Biotech Index, which generally is weighted more toward the slow growth bellwethers in biotech. And so, in our view, that's not necessarily a great area to invest in, a kind of a diverse, rich ecosystem. What's going on in oncology, you miss out on that, and it is under indexed to areas like diagnostics and some important and more relevant niches like radiopharma. You could say that similarly with the S&P Biotechnology Index, which tends to be a better proxy for the small mid-cap biotech companies. The problem with, as you still actually have areas like tools and diagnostics where you don't get that much exposure, and then you do continue to miss just under index in certain important niches. And as we mentioned before, there are a lot of undifferentiated companies that could wither and divine within that a small mid-cap index. So to sum up, I think you can have a focused approach in oncology, yet invest across the entire continuum of companies and go through many different technologies through an active approach, and trying to find differentiated, breakthroughs at reasonable valuations. And I think some of these things, you just can't necessarily capture that through a more passive approach. So, I'll hand it over to Yuri for some final comments here.
Yeah, thanks very much, David. If you could flip to the final slide, I'll give a few kind of takeaways, at least for me personally, looking at this space. Obviously, cancer is a terrible blight on society and on healthcare and human life and health. And what's really fascinating is just the revolution that's happening out there. and this revolution isn't really being represented in stock prices. We're on track for a third worst, third down year in biotech. And a lot of these companies, as David mentioned, 30% of them are trading below the value of the cash on the balance sheets. And some of this innovation, hopefully we've given you a nice introduction to it. And as I said, you can have exclusive access to a report we've written on these, which goes into a lot more detail. And there you can see really how these innovations are affecting patients' lives and improving things. And these innovations will lead to catalysts over the next couple of years, which we hope will unlock this value that's sitting in the biotech space. And that's already happening because large pharma is getting involved and buying some of these companies ahead of time and validating some of these technologies. And of course, one way to get access to these innovations is the fund that's managed by David. He has a lot of experience looking at this space. Hopefully, what we've highlighted here is that there's been this burst of innovation has led to a burst of investment opportunities, but not all of them are made equal, and it requires quite a lot of expertise to look at this sector. And hopefully, the report highlights it, and what David's been saying. That this is an area that requires expertise and to lead to good investment outcomes. And so on that note, you can obviously download the report in the chat. We've attached it. I'm going to just open it up to Q&A. I can see a couple of them have already come in. David, hopefully you're happy to answer some of these questions. I think if you want to stop sharing the screen, we can jump straight in. Great. So one of the questions we got here, which is a pretty fair question, is that biotech notoriously is quite a volatile sector. We were just talking about the bear market that we've seen there. How do you sort of manage this volatility, David?
Oh, that's a great question, Yuri. I think, as I mentioned before, we try to take a balanced approach across the types of companies, and we do own about a third of the portfolios in what we call ballasts in the portfolio. That tends to be like defensive-oriented companies, high-quality companies with prodigious cash flows and strong balance sheets, really good R&D operations, very much consistent with the Tema philosophy of how we evaluate companies in general, in healthcare and outside. And for a lot of the small cap companies that are in the development stage, we really much look for strong balance sheets with long runways. And when we look at, and a lot of these companies are event driven, they have like clinical trial catalysts, regulatory catalysts. We try to really, from a risk management perspective, be cognizant of the potential downside and size positions appropriately.
That sounds great. One of the technologies really sparked the interest of one of the listeners, which is this liquid biopsies, right? And then the question is, how far away are we from having a truly multi-cancer screening blood test?
That's a great question. I see that getting from that sort of endpoint, there's just so much opportunity in between, from informing treatment selection to really managing cancer recurrence, and actually, quite frankly, revolutionizing clinical trial design. I do see multi-cancer screening foreseeable in a foreseeable time horizon for a long-term oriented investor. But what is the ultimate challenge here, in my view, is whether the developers can demonstrate clinical benefit at sort of reasonable costs to garner reimbursement, which I think will take some time. And it may require some legislation, but some of that legislation could come up because it tends to be bipartisan.
That's really interesting. Well, someone seems to know the conference world here very well, and they're asking about ESMO, which is a big European conference related to oncology. Any interesting insights that have come out of ESMO in the past few weeks?
Well, that's a good question. I think we haven't completed the conference yet, so I'll just let that be a cliffhanger here. There's a lot of interesting things going on here. I think you've seen already some interesting data reported out on these TRO2 ADCs. One in particular that AstraZeneca and Daiichi are running. And I think the bottom line here is that sort of field is very much an open wide space. But there's some interesting things going on over the coming weekend. I'll just sort of give you a clue. The RAS pathway. It's been very difficult to go after the RAS pathways because you might develop a small molecule drug, and all of a sudden there's a resistance pathway. There are more than just the KRAS G12C mutation. For those who know, that's one of the first ones tackled. There's 12. There are other sort of KRAS mutations. So we shall see whether there will be progress in this field. So stay tuned.
Excellent. Right, so we've got another question that's come in, which is related to biotech research and development being very capital intensive. Obviously, we know clinical trials are expensive to run. One of the parts in the pie charts that you presented of your portfolio, obviously it's a diversified portfolio that's balanced, but is these, I guess, biotechs that are not really generating any revenue yet. And so how do you kind of think about that capital intensiveness, and how do you approach maybe any potential kind of dilution that might come up if they need to fundraise further?
It's no doubt a risk. I mean, inflation affects all sectors, right? The cost of drug development on the clinical trial design has increased. I think you can argue there was an excess of a lot of companies coming in, and that sort of drove the prices needed to recruit high quality medical directors to run trials. But it sort of an answer to your sort of the answer to the question here. I think in many respects, we do think that the reality is that you need to have a very strong balance sheet and then try to raise capital when these catalysts occur. You are seeing partnerships here, but then you do see some companies thinking, hey, the payer environment's getting worse. I see the writing on the wall, and they sell. And I think I think that and you're seeing perhaps the buyers are selling at slightly lower prices than what they were during the go-go years. And I think that's healthy. Secondly, we do believe that it is still quite possible to run a commercial-oriented oncology company. I think it's much harder to do that in sort of primary care markets, but I do think in oncology you could still run a specialized sales force. But no doubt, the spending on clinical trials, that is a risk. But we still think that with differentiated data, that has a significant asset value, as well as accelerated pathways are still an important feature that will continue in oncology.
That's interesting. So it sounds like you basically you assess the risk reward of all of these events and kind of events behind it. One question that's come in, I guess you're probably not going to answer this because you run a fund, so it's hard to pick your favorite children. But maybe you could highlight a couple of companies that you think are really exciting in the oncology sector. We touched on a bunch through this presentation. I'm pretty sure I know the answer. It's kind of the fund has a broad exposure, so you shouldn't pick any specific companies. But maybe one or two you would like to highlight. I don't know.
Yeah, I mean, I think I can't really pick for favorites here, but I will say this, that a particular subsegment that's really not easy to invest in the representative indices out there. It's been a very difficult area for investors, actually, because of really high valuations. But I do think some of these companies, I'm not going to name specifics, but they're in the diagnostic side of the equation, and to a lesser extent in the tool side, that are enabling oncology development, drug development. And you have the white space of liquid biopsy. Those are areas that are not subject to generally drug pricing concerns in our view. It's game-changing white space, and I think a lot of these fast-growing companies in this area are trading at really interesting valuations, and you can actually start thinking of them in terms of, there is a path to profitability where they could generate nice growing free cash flows. And so managements, you're seeing some hints that managements are actually seeing more religion in managing operating expense, not grow at all costs. And I think that's an opportunity that people will may miss because the returns on the recent returns of some of these stocks, they've re-rated downward. So the sentiment's terrible. I think though there's strong valuation support.
Very interesting. Okay, two questions have come in, and they're sort of related to, I guess, what's going on out in the markets in terms of big themes this year. The first one is really AI and artificial intelligence. How do you think about the impact of AI on biotech research and development?
Well, I mean, it's something that we have to think every day. Everyone thinks about AI in terms of how does it affect your, in the workplace, right? How do you implement it to make your research efforts more efficient? But specifically when it comes to areas like biotech research and development or diagnostics, I think, we can talk about other areas like clinical medicine, but I do think AI will have a positive long-term impact on biotech R&D productivity, particularly the drug discovery side of things, and also impact diagnostics. Now, with respect to therapeutics, the true test is whether these efforts can survive really the idiosyncratic nature of human clinical trials and be clinically meaningful. You can't, it's really hard, and I think people are trying hard to think about efforts on the clinical side. But clinical development, is, I mean, arguably there's less data than, you can run tens of, if not hundreds of thousands of preclinical experiments, right? So I think progress is being made, but I think you're gonna have fits and starts.
Very interesting.
And you don't want to overpay for it, but we are looking at these names, and one of the dangers is overpaying for the concept. But what we try to look is, can these companies prove to Wall Street and prove to us and investors that you can invest in, you can come up with differentiated clinical data. And a lot of the AI-oriented companies have suffered from the lack of real strong medical op capabilities, which is kind of a boring area. But you gotta have good medical operations folks, number one, and number two, you got to make good pipeline choices. So I often wonder if, for example, if the AI companies today were started, would they all be doing GLP drug development? I don't know.
Interesting. And it's funny you mentioned GLPs. Obviously, that's the other big area. I mean, you can hardly escape in the press, at least in the healthcare press, reading about the rise of these weight loss drugs that focus on GLP-1 and kind of the future generation of that, and obviously the massive breakthroughs they've made. And we know that weight loss or weight gain and being overweight is often associated with lots of comorbidities, one of which in many ways, indirectly has been proven to be oncology related. And so I guess one question to you that someone said here is, does the rise of weight loss drugs have any effect on the oncology space?
Right. I mean, I'm not going to have a chicken way answer and say, hey, semaglutide has some, warning label on rat, thyroid. I don't want to do that. I mean, that's, we don't want to run into that. I mean, the outcomes data from semaglutide were fantastic. A 20% improvement in non-diabetic, overweight, and obese patients with, cardiovascular risk, pre-existing cardiovascular risk. I think, in my view, that obesity drugs will not have a strong impact as other sort of segments like NASH, because, as we mentioned before, it is still largely a disease of aging. Now, reducing the burden of suffering from severe obesity, that would actually, have implications. Like, it would improve prognosis from a cancer diagnosis. It could have implications in running early stage, cancer treatment trials. but in our view, the impact is not as great as other sectors.
That's very clear. Couple more questions, David, and I think we'll wrap it up. I think one of the somebody's asked, is your medical background helpful to understand the sector?
I mean, I think I think that's a good question. If you're taking it seriously, is it necessary, or is this? It's certainly not sufficient, right? I think experience, passion for the market's very important. For me, it's enormously helpful to tease out clinical data and assess the quality of clinical trial design and development, evaluate the science in the industry. How you also apply them commercially, these drugs and diagnostics devices. How you apply them in a medical setting. Are they going to get reimbursed and change a standard of care? But I also say, there are I'd like to think that I love the science, love the medicine. I think the passion is there, but I don't try to love it. And I think my PhD in health economics and economics actually does help, because it asks the question, how do you pay for all this innovation? And that's an enormous problem in societies, and a risk factor. So I think it sort of level heads me, and it gets me back to thinking, the knowledge is helpful, very helpful, but don't overlove the science, where we are investors.
Great, David. I think in the interest of time, I think we'll draw stumps there. Maybe you would like to say just a couple of words to the investors on the call about the oncology fund, and just maybe you will leave them with a couple of final words.
Yeah, no, Yuri, thanks. Thanks everyone for being here. I mean, I think, to sum up what we've said, I think there's a really an outstanding opportunity in investing an area in healthcare, oncology, where it is a robust ecosystem. The innovation continues to be there. The fundamentals are intact, and at the same time, you're getting into very attractive starting valuations. So I think these are recipes that are of success for a long-term oriented investor.
Fantastic. Thanks very much, David. Thanks everyone for joining. As mentioned, you can grab an exclusive copy, first look of the Insights paper, which we roughly presented today. It's got a lot more detail on the 5 different innovations. You can download it in the chat. And if you're interested in the fund and checking it out, please head over to temaetfs.com. There's lots of information about the fund and presentations and David's background, things like that. So thank you very much, and have a lovely rest of your day.